You know, we don't take days off when it comes to making you money. That's our job. So my stock for you is, especially for your 401k, a company called Medtronic. I think most of you are familiar with it. The symbol is MDT. Now, there was a time when this stock was an absolute no-brainer. I'm talking, it made the kind of money, it was a moneymaker of legendary proportions. Adjusted for splits, it was 40 cents in June of 1984, went to 60 bucks by December 2000, 15,000% return. Absolutely unstoppable. And then the stock went sideways, actually mostly lower, until it was finally, the top was actually, that 2000 top was actually finally taken out last March. Now, ironically, the investment thesis of older people, more active Americans should have helped the stock, but it ran into a wave of issues, particularly legal issues and mismanagement by the company. That seems to be behind them right now. They've got a pending acquisition of another company, and I think that this company is Cpayne, and I think they're poised for another long-term move to the upside. Now, their focus is on therapy innovation, globalization. Last quarter, international was 44% of business, emerging markets 12% on a constant currency basis. Their value-based healthcare, really everything I think is ready to roll. They're going to have a lot of product introduction. They had a lot of product introductions last year. Very, very impressive pipeline right now, not just for this year, next year, the year after that. Going into 2018, we know what they've got. Free cash flow getting stronger, particularly post-merger. I think they're going to unlock a lot more value. They're going to have a little bit of pricing power in a growing market around the world. The stock has about average volatility. My target is 100. It's not a day trading stock, but I do love it for your retirement accounts. All right, Matt, what do you know about Medtronic?
I like the merger with Cpayne. It's a tax inversion, so they're moving their base over to Dublin, Ireland. I like that. A lot of synergies between the two companies. What I really like this company and this sector is if a Republican president comes in, they repeal the medical device tax and the ACA, which would be huge for this company. So I like that going forward. Stock's been consolidating. Nice time to get in. Nice long-term play for me.
What do you think, Dominic?
Look, I love the overall theme. We're all getting older. We're living longer. Healthcare is a huge part of that. This could be a company positioned for a long trend in that play.
I love their product pipeline, guys. I just think that they're spot on. They already know when they're going to introduce all of these things. They've got dates. I think it's going to be phenomenal.
They got over 200 projects that they've invested in, so they are innovative. 36 years of dividend increases, so they're a good income producer. And to finance this acquisition, $17 billion of debt at a 20-year maturity. They tapped a unique place in the market, so I think they got a good, strong balance sheet to go forward.
John doesn't look too enthusiastic.
Uh-oh.
Well, you know, I can't comment on specific companies, but remember, Medtronic just had this big merger with Cpayne, bought the company. I think looking forward, you're going to see more merger and acquisition activity. That, on balance, is going to be a positive for the equity market, especially since corporate borrowing costs are going to probably remain very low.
What about you, Hilary?
Medtronic's a thumbs up. Look, it's all about cardiac care. That's the direction we're going.
All right, guys, especially if your paycheck peaks at 35. I mean, all right, guys, listen.